is evolved in 90s, 95, these foreign exchange markets evolved. Similarly, we have seen a lot of changes, lot of developments. Less than $500 million turnover per day in Indian financial markets. In case of dollar rupee, it is over $9 billion daily operations in dollar rupee at India, and similar amount in India. That is hopping over $16 billion operations in dollar rupee. And similarly, all the other markets have developed. The volumes have increased, and we are emerging. The next decade, we will be one of the financial market moving towards emerging market to have a developed market, whatever is available, that is likely to happen in Indian market. So what we see in a gap is, so there were trading as such is not a good word when it comes to regulators, and when it comes to, I'm not talking about government. Government is not much aware of why trading is necessary, why trading has to be encouraged. So it's simple logic. Any product, when there is a buyer, when there is seller, and the price between buyer and seller is as narrow as possible, that is a good market. Second requirement of a good financial market is liquidity. If there is a $100 million or $1 billion rupee deal to be put through, and it happens within a range of 5 to 10 paisa, that means there is a depth in the market. All these are slowly emerging in India. So market is evolving. Even trading in currencies, currency futures are introduced. You and I can trade. Institutions, of course, are trading, and no more the trading is taboo for the government as well as the Reserve Bank. Still, having said that, I know still some restrictions are there, and slowly it pays down. So coming back to the Zen, see, trading, when I started trading, so we used to trade based on the view, based on the supply demand, and the what is happening overseas. Not much attention is paid to that also in 90s. It is mostly what Reserve Bank does, what is happening. It's hardly 10, 15 paisa, 10 paisa, 12 paisa movement. Keeping dollar rupee short or long on a consistent basis, it is to give money. And there were a lot of arbitrage opportunities where easy monies where bank dealers could make then. But things changed, things changed and market evolved, and what global characteristics of market has evolved in foreign currency. Same with equities, same with government securities. So there is a requirement of knowing the market. There is a requirement of knowing what is fundamental analysis, how it affects the various financial market in India. Similarly, technical analysis is a very powerful tool, and how the technical analysis can help a dealer, whether a short-term dealer, a trader, or a long-term trader, where to buy, where to sell, and how to build up the positions. So with this background, so this Zen was introduced. This is we are having 7th Zen batch. So far, we have trained over 52 people, and the training schedule is that it's about how to make traders to be a master trader, whether you have experience or not. The commitment at Zen is that our commitment is to, in this 3 months period of 100 hours of teaching, we are making all the effort to make you a master trader. A master trader is a super trader. He consistently makes money. He understands the market. That is why we tag that master trader tag to him. See, what is master trader quality? He demonstrates complete conviction, and he is totally committed, and he has a very good time-tested strategy. With this as a background, he has a confidence to take large financial risks and believes that probability on his side. Trading is a game of probabilities. One more the best character of that master trader is ability to admit his mistakes and minimize the consequence, that is losses. When they're wrong, they will immediately catch themselves and they will make the loss minimal. Loss is a part of trading. Another characteristic of master trader is an independent and think for himself. Most traders surprisingly are not like. That is fine. That is why there is an opportunity for Zen to make a a trader who is coming with following following things in the background. Most of them are indecisive. Okay, they lack conviction, and few of them are afraid of taking risks. And they will sit and watch the screen. They know that this is what is going to happen, but they will not execute the deal. Again, execution is again a skill that will be taught in the Zen training. How important execution and how our psychology and mindset doesn't allow to us to execute the deals. So we will be taught how to execute the deals, and afraid of taking risks and making mistakes. Most of these people, they are not aware of personal demands that they're holding them back their success. So this will be we could assess what is the personal demands of all the participants, and they will be taught how to overcome and to convert them to this sort of traders to master trader. This is one of the objectives, primary objective. The faculty has experience of helping to them team to maximize performance. We have faculty lined up with starting with Yashwant Rao, over 40 years experience in foreign exchange and commodity trading. We have Tyagarajan. He was recently retired from as a senior vice president from Reliance Industries. He is active in the market even today, and he teaches on technical analysis along with Rao sir. Then we have Rajgopal sir. Rajgopal is senior vice president at Kotak Bank. The last position held over more than a decade or 15 years. He's resigned and he trades himself. And I'll give his introduction because he's one of the guest speakers today. So, and we have mind coaching, people who are trained by Dr. Mohammed Solanki, a mindset coach, founder of Performance Enablers, is with us. He's also going to speak. And he will be training mind coach. And for physical training, we have Daniel Denizo. He's again a celebrity. He's a Nike coach. He will be there. Again, I'll be introducing when he's going to talk. So another common trait is, most of us will blame the market. Now we'll say it's why commodity prices are gone up. None have expected this. War broke out. These are all it is under not our control. And that's the reason for non-performance. The training, and this will know, what is the reason for non-performance. It is not war, it is not the commodity prices. It's about our own thinking, our mindset, our reasoning, and that lacks planning and strategy, which we focus on that. The training is a structure where we have a weekly meeting to help to identify and modify the limitation thoughts of traders and few of the bad habits we identify. We help to modify the trading behavior by incorporating successful trading strategies. We monitor the results to ensure that trader is committed. Results speak themselves. We have seen those who have followed the structure, those who attended all the classes, not only the technical classes, mindset, coaching, and the physical training. Those who have followed, we have seen results of their training improving by 100%. And we have individual traders who participated without any background, and they were the best participants in the batch. And we have people from banks like Bank of Nova Scotia, Union Bank, RBL Bank, Bharat Cooperative Bank, Karnataka Bank, and from Wipro, they participated in this training, and they're all happy about the outcome, the progress these traders made. Individual traders, even today, they trade and they make decent money. Those who followed, as like any other program, the people who have not participated have stopped trading, and that results will speak only and only. It's a very highly committed premier training program. So you have to work a lot, participants. It's simple, combining common sense with established psychological principle we teach here. We, with a greater understanding of the markets and its complexities of being master trader, will be shared in detail. With this, now I'll introduce the Mr. Nikhil Sohoni. He is a senior vice president and a group treasurer of Mahindra & Mahindra. Nikhil is by qualification, he is a chartered accountant. and he has done his education. One of the person to watch in the days to come. He is a future leader. He has done a future leader program in M&M leadership. He has done LA School Management Future Leader Program in 2016 to 18. He had done Mahindra Universal Program at Harvard Business School. He had an experience of being a chief financial officer, went to senior general manager finance, vice president finance, and now senior vice president and group finance and group treasurer at Mahindra and Mahindra. His work involves strategic finance, capital structuring, global banking relationship, fundraising, corporate rating, investments, risk management. When risk management includes foreign exchange and commodity interest, and capital expenditure evaluation, financing, merger and acquisition, so many other things. The small part of his what he is going to speak today is a small part of it, but I know that is a very critical and important part. And he's passionate today, in spite of his busy schedule. Whenever I call for Zen, he won't say no. He has a passion to share the ideas, and he will come and ask me. He may share it today again. We at my M&M, we don't trade. Why, Bijur, you are persistently asking me to come and talk? But I have a selfish interest there. That means, see, it is not about trading. Whether you trade or not, when you have a exposure, there is a very thin line between trading and hedging. Okay, so he may say that to the world that they are not trading, but they are also interested in how to add value, how to manage the risk prudently. Okay, one of the best of the treasuries principles they adopt. That is the reason I am calling Nikhil Sohoni time and again. Thanks, Nikhil, once again, and over to you.
Yeah, thanks, Mr. Bijur. I hope you can hear me.
Yes.
Yeah. So thank you. Good evening, everyone, and it's pleasure to be here. I always like to come to this program here because of the passion which Mr. Bijur has, and also because of the depth, the breadth that this program offers. It's technical, it's physical, and it's mental. So I really kind of envy you people who get this opportunity to probably do all these aspects which are required to handle a good treasury and to be a good trader. Now, yes, what Mr. Bijur said is right. He has been calling me for these programs, and I've always told him that M&M never trades, and why am I in a program of trading? But then when I look back, I said that if you have to be a good treasurer, what is required? Can I sit in the treasury without having looked at what plants do? I don't think I will be a good treasurer. Probably the best part of my treasury came after I had a stint at the plant level, when I understood how exactly does the materials flow, how exactly does the working capital flow. Because then when you have that understanding, you can do a good job of treasury. Similarly, if you come to know how corporates look at treasury and how corporates look at risk, probably as a trader, as a banker, you will be able to do better job, because you will kind of are in a position to understand what exactly is the person doing when he's taking a hedge. So I'll just give you an overview of what it is to manage a risk in corporate. It is very funny. We have both the sides, and this our executive director, earlier executive director, and the person whom we respect, Mr. Doshi, always used to say that we have on one side someone who prays for rupee depreciation and someone who pays for rupee appreciation, because we have importers, we have exporters, and we in the middle are required to ensure that both are happy. Now that's the difficult task of a treasurer. So how do we go about doing it? There are of course ways to manage this risk. Do we do gross hedging? Do we do net hedging? How are we going to manage this risk? And while we do this risk hedging at the company level, please be mindful of the fact that there is a lot of import which is happening at our vendor end, which is our indirect exposure. So the same company which is an exporter, say at a net level, may actually become an importer if you look at the indirect exposure that they have. So that's the complexity which is required to be managed. So what makes this job very interesting is that you have to add value while managing this risk. And it all starts with a simple thing like exposure management. Now, what is exposure management? Exposure management is just to know what sort of exposure does your company have in different currencies. So you have certain currencies where you are an importer. There are certain currencies where you are an importer, the exporter. And again, the exposure at vendor level, exposure at your level. And this exposure, please be mindful again that it keeps on changing. So every month we kind of are required to update this exposure, because I need to see that the hedges that I have taken, are they sufficient? Are we overhedged or are we underhedged? And that I will only know if I update the exposures. So it all starts with a simple thing like exposure management. The other complexity that at corporate we have to see is, how long do I hedge? Do I hedge only for my budget period that I know, that is for my next 1 year? Or because rupee is depreciating, you are getting very good levels. Today it is at whatever 77.5, the forwards are going up to 81. So go out and do a 2-year hedge, go out and do a 3-year hedge, because you will get a very good level. And rupee is not going to be at that level after 2 years. Now, who knows where is rupee is going to be? No one knows. But you will get all sorts of advice as to what you should be doing. So probably as a corporate treasurer, what you need to do, and not only as a corporate treasurer, but even as a trader, I will say is that just keep your cool. Don't get swayed by what people are telling you. Make your own assessment, make your own judgment, and don't go overboard on anything. Either on the hedge side or the risk side, covering side, or leaving the things open side. So you have to ensure that you are being balanced and you are managing things in a way that what best the situation calls for, you are doing it. Now, how do we do that? We don't go to time the market. We don't do that. So there is a simple rule which we follow. If I am required to hedge, I will do it in a very phased manner, in a very layered manner. I will not all put my eggs in one basket. So rupees at a very sweet spot of 77.5. Let's go and hedge all my exports. We'll never do that. So we will do some 5% hedging, 10% hedging. We will go on increasing the hedges as rupees depreciate. Now, what if the rupee starts appreciating? We will have defined the stop loss level. We will have defined the take profit level. At which level, the certain level of hedging we will do. And every trader is also required to do this. So just like a corporate treasurer is required to do for his protection, a trader will also be doing a good job. I'm sure, of course, I'm not a trader, so I don't know, but Mr. Bijur will teach you, but I'm sure that they need to have this stop loss level, take profit levels, and do it unemotionally. Because if you let your emotions come in there, then you're not going to do a good job. So to a certain extent, you have to be very, very kind of practical, technical, and not take calls. You have to go by rules. Let me tell you something interesting thing which I had done some time back. There are these research reports which come from bank. Many of you would be aware. I had just kind of looked at last 3 to 4 years of 16 quarters. I had taken a research report and plotted exactly where people had projected rupee to be. Let me tell you, after the 16 quarters, I think only one quarter they had come right. So that's what research is all about. And that is because of the fact what again Mr. Bijur said, there will be a war, or there will be some election, or there will be 10 other reasons why rupee has moved in a particular fashion. Or maybe people thought inflation was transitory, that is not transitory, rates are going up, therefore currency is getting impacted. There will be a number of reasons. But the fact is, things are going to be volatile. Things are going to change. So what, again, as a trader and as a treasurer, you are required to do is to be agile. You need to be agile because you need to take your calls. You need to take the mindful calls and your quick calls. You cannot be sitting on something hoping that the things will go in your favor or against you. You will have to kind of take those calls at that spur of that moment, of course, without going overboard. So take a balanced call, take an important whatever is required at that situation, but be agile. And everyone has heard not many times, it's a VUCA world. So let me just give a different flavor of this VUCA. Somewhere I again heard it, but which just stayed with me. VUCA is to be, and as a trader, as a treasurer, again, to be virtuous, okay, to be understanding, to be compassionate, and to be adaptable. Why I'm saying all of this is because if you have these traits, not only will you become a good treasurer, but you will become a good professional. And you need to understand what you are doing, because one thing which, of course, I'll sit separately with Mr. Bijur to understand, which is said that, as a trader, you will always make money. I want to ask you, who is losing money? Is it corporate? I don't know. But the point is that if you have to make it a win-win situation where everyone is going to make money, then you need to understand what a corporate wants. You can't be mis-selling the product to a corporate. You will have to do something which in a way can be win-win for you as well as a corporate. Don't let a corporate treasurer take any risk hedging which they don't understand. It is very important that a person who does the hedging understands what is hedging, understands the instrument that is going to use. Because if you have not understood what risk management you are doing, then it's not worth doing that risk management. You are actually adding to the risk. And as a trader, as a banker, I think it is your job to help him understand that. So we'll try to go by hearsay. I don't think one should do that. And nor should a trader go by hearsay, and you will not. And that is why you are in this training program. So once you have this trading, you will have that technical knowledge, which you will have to pass on to those traders for them to understand what risk management means and what risk hedging they are doing, how that is going to impact them. A lot of things are being talked about technology, whether it is predictive analytics, AI, forecasting, and all of these things. These are new buzzwords which are there in the market. Maybe some of them are relevant, but as I told, research reports will definitely be using all of that. But no AI can predict a war. No AI can predict an election result. All of that will be there, but things will still stand and on its own do something. So at that situation, how should one react? What normally happens, I have seen in many treasuries, is people panic. Okay, and I get those panic calls. If rupee has to tomorrow come down to even 75, there'll be of course that I'll be caging heavy exports. What about it? Now, are we going to lose out? The first thing is don't panic. Everything goes up, comes down. There is a time for everything. Whatever you are doing, do in a sustained manner, do in a very, very balanced manner, and be in control of what you're doing. The moment you start panicking, you're going to make a loss. So that's some of the basic things which I as a corporate treasurer look at. Of course, you have to look at the products, what product you are having. If I have a fixed price contract, I will go out and hedge without looking at what tenor for the entire contract period I will hedge. If I don't know what visibility is there, wherever rupee may go, rupee may tomorrow go to 80, but I will only hedge for my budget period, because beyond that, I don't know. And what is hedging from the corporate side? From the corporate side, hedging is just giving a lease of life to your operations. So if I'm going to hedge for next 6 months, I'm giving that 6 months period to actually correct the product, to do some value engineering to correct the price, because hedging cannot help them forever. Finally, if you have to be competitive in this market, you have to ensure that your product pricing is what is going to help you be competitive, not the hedging. So hedging is going to give you a lease of life for certain period. So as traders, you have to see how best you can help any corporate do that. So that, I think, my insights as a corporate treasurer on what it is. I'm open for questions to discuss anything if you want, or Mr. Bijur, if you want me to cover anything, I can do that also.
Yeah. Yes, we can take some questions from the participants. You can put it in chat. Yeah.
Hello, sir. Good evening. My question is, and I have only one question. Every hedging we do as per the investment policy or the hedging policy, do you follow the mantra that we need to hedge only for the minimum X%, or we sometimes go, I mean, the minimum is just for the guidance, but generally you do hedge only for the minimum X% of the hedges, or you also go about, say, X increasing of X plus 10% or X plus 20%. What is the general guidelines on this?
Yeah, so what we do is we do have a hedging policy. We have investment policy. There is a risk management policy which is there. There is a committee which is there which sits to discuss all of that. What we do is that we follow a norm where we do net hedging, because if there is an import and an export, we only do the open exposure. For that open exposure also we define in terms of we will go out and hedge, say 60 to 70%. So up to 70% we will hedge. Now, why is it that the 30% will only open? Two reasons. One, as I told you, exposures also keep changing. Because tomorrow, if the global demand comes down, what I have budgeted may not actually happen. Now, at that point of time, I can't be overaged. So I have to give some allowance for business exigencies. I have to give some allowance to participate with the market. Like I may go out and hedge when rupee is at 77. What if rupee tomorrow suddenly goes to 85? I'm just taking a hypothetical, it may not happen. But you cannot rule out. Now at that point of time, I cannot be totally out of competition by saying that I hedged everything when it was 77. So that 30% which I leave open is to cover such exigencies. I do some amount of options because that again allow me some part of, to participate in the market at some cost. So it's an insurance which I pay. And some amount I will hedge. So over the period of last many, many years, knowing how the business exigencies move, knowing how currencies move, we have been able to kind of work out an equation which helps us manage this risk better. But yes, there is a policy, there is a guidance which we take from this policy, and that's how we manage things.
Yes, Maulik. Maulik Shah is my partner and co-founder of Almos, is CEO there, and incidentally, Nikhil, Nikhil Sohoni and Maulik happened to be colleagues long time back. Yes, Maulik.
Hi, Nikhil. Always a pleasure to hear you. So,
Hi, Maulik.
And most importantly, pleasure to hear your perspective on the subject. So one of the things that really today what you said, one is of course a unique definition of VUCA world. So very important and something that I will definitely register. The other piece is what you said, risk management gives a lease of life to the corporate, and that's very insightful. I just want to have one question, and I understand where you come from, that after 6 months, end of the day, corporates are selling the products. So product engineering, value engineering will take care of itself. How does it work in a service business? And I'm sure, even M&M has, say, Tech Mahindra is one of the services where you have a 3-year and a 4-year contract at the same price. And the service fees or the pricing is fixed for 3 years. Where, how will the hedging work or the risk management approach will work?
Yeah. So that's what, Maulik, if you say, I did make a mention of the fact that, for a manufacturing company, I go by budget period. But when it comes to a service industry or for any other place where I have a contract, I go by the contract period. So if the contract period is for 3 years and it's a fixed price contract, I will go out and hedge today. So there is, we will not be taking undue risks in the anticipation that if the rupee goes on depreciating, I'm going to gain. Because it may very well happen that the rupee will appreciate and I may lose out. So there is a particular working which has been done when the fixed price has been arrived at. We have to respect that. And the moment your pricing works in your favor, if you know that today you have entered into a contract and I'm making a particular contribution, which I was happy with when I entered into the contract, go out and lock in. The worst thing to do is to have greed. If you are greedy, then there is no end to it. Yeah. There are certain things which have to be done clinically. And there, as I said, therefore, I have made a mention also, no emotions.
Sure.
So at that, I think service contract, as per the contract period, just go out and lock it in. You are not here to make profits as a corporate. I'm saying, I'm not talking as a trader. As a corporate, I'm not here to make a profit on a service contract under a hedge. Sure. I am here to make a profit on the service contract by providing those services.
Sure. But just the other piece of that is, because the moment I try and lock in 3 years, then the next question is that, I'm then making my EBITDA or P&L volatile, because end of the day, I'm locking in for 2 years and 3 years. And then I'm forced to adopt the hedge accounting to neutralize some of it. And there could be a competitive disadvantage. A scenario like this, where rupees depreciate.
No, but see, now this contract is fixed for 3 years. So I'm presuming when we are saying this, there is no revision in price which is going to happen.
Yeah, that's right.
So that contract is fixed. If the rupee has to depreciate, for my any future contracts, that is going to be the reference. Because sure. I have only hedged this contract.
Got it.
So at that point of time, depending on what the projections are, We do the working of what level of rupee or what level of rupee dollar is going to give me a particular level of contribution. And when we hedge, we kind of freeze that contribution levels. So for that particular service, as long as the contract cannot be reopened, okay, I cannot be uncompetitive as compared to what competition is providing. And any other contracts, of course, I'm going to revise my price depending on, because it's an open contract which I'm entering into. If there is a revision clause which is there, then you will have to be very careful. Then you have to do a part amount of option hedging, use options. So all of that will come into play if you're going to leave that flexibility open.
Got it. Got it. Great. Thanks, Nikhil. Yeah, back to you, Bijur.
Yeah. Any other questions? So in between, I'll ask one question. That my question is, Nikhil, you have been gone to a overseas to this future leader program, and I'm sure by what you have talked about, most of the things we cover in Zen, being cool, being patient, managing the mind, maybe managing the health also, all these softer issues, what is that you learned there? Can you share with the participants as well as people how it helped to shape you to not only to manage treasury and to become a successful professional in treasury as a financial professional? As I said, you are a man to watch in the days to come.
No. So I think, Mr. Bijur, I think what I loved about this program and what I said in the beginning also, that if this was only a technical program, probably it would not have been exciting. The exciting part is that the physical and the mental part which you bring to it. And that is something which I learned in the programs where I had an opportunity to go abroad, of course, thanks to Mahindras, both at the time of Future Leader or earlier at the time of Fulbright also. One important thing which I learned was quite a substantial amount of time was spent on softer issues. Quite a substantial amount of time was spent on mind. How one kinds of controls the minds in terms of various things. Not only in terms of how you kind of handle a particular situation, but also in terms of how not to panic or what to do. A simple example, I will take you a simple thing like the words which I learned over there, put the fish on the table. Okay, it was a topic by itself, which was covered for a few hours. But it is such an important topic that I felt when I saw for my life once I came back, that every time there's a problem, or when I see, like you said, be transparent. If you're making a loss, if you're making a profit, whatever it is, put the fish on the table. Don't try to cover up things. Okay, don't try to put the things under the table. It's going to smell after some time. So these are the kind of softer things which come to you, which you learn from. And for every aspect of your life, it will be useful, whether personal, professional, even in personal, there will be differences which you'll have in your family. Just put the fish on the table with your children who are growing up, with your wife. Don't let it simmer. The point is that these are softer points which help me in my life going forward. And I see that it helps you ease out. It helps you kind of relax. And it also actually helps you do a better job.
Yeah, it's a beautiful way you answer. Put the fish on the table. Maulik may be wondering because he's not eating the fish. How to put the fish on the table. Those of you who are not eating, that is a problem. I'm not recommending you should eat a fish. And again, you asked the question that, Nikhil, that how do you, Bijur will say, share, how do you make traders who are trained by us always make profit? Very simple. In this market, unfortunately, 90% of the people, I said, they are indecisive, they are fearful, they greed, they don't want to pay the money to the market. See, any business, first you have to give, okay? Or you should know to give. The person who does not ready to give, ready to spend money, or ready to give money to market also will not give money to it, okay? So fortunately, for a master trader, there are 90% of the people have no planning, no strategies, no underlying. Okay, if rupee goes to 80, they should have 0% hedge. If rupee becomes 73, 74, they have 125% hedge. So these are all greed, fear is just not possible. So another 5% people are in between, they survive. So they know, they will manage 50%. Our Yashwantrao always says that the standard principle when you are advising, hedge 50%. Okay. Rupee appreciates, yes, you have 50% hedge along with the premium. some relief. If rupee depreciates also, the AUM balance is there. We have added value. Very simple thing to survive in the market. So another 5% people are like that. They are managing, they survive in the market. So other 5% people who all, whatever you said, they have a planning and strategy, they don't hedge 100%. See, one thing I can tell you with the confidence, Nikhil, and all the participants benefit, this technical analysis may not be correct. Research reports may not be correct, but it gives a definite indication how to shift. Whether I should hedge today 100% exports or 100% imports, definitely technical reports has shown clear indications. Whether it is the dollar rupee or whether it is euro dollar or pound or oil, technical charts are giving a clear indications of what is going to happen. So it is easy to take. That's why I say that it's a powerful tool to make decisions. Okay. So see, fundamentals again, fundamentals may go wrong, but technicals to manage your hedge ratios, it helps. So any other questions? Or
I would just like to add there, Mr. Vijay, on the research report, see why I said it on the lighter note, but the point that I want to drive there is that don't blame on anything. Don't blame on research.
Correct.
I'm just saying that we should take our responsibility. We have to take our calls and we have to be agile.
Yes.
That's the point which I want to drive. So I cannot say that the research report said it and therefore I did it. So that is my study. So I'm just saying that therefore these trading classes become important is because then you also have your own judgment. So take the research report, take your judgment and take a conscious call, which you will do on a sustained basis. That sometimes you may lose, sometimes you may gain. But the point is that don't go overboard either side and don't try to see that I will get the best rate. I will hedge at the best rate and I will always get the best in export. I'll always get the best in import. That is a myth. Do what is best for the moment.
Yeah. See, the blaming game, one of the common, we are analyzing some 20-25 common mistakes are there. One of it is blaming the market. Okay. Traders are very, this kind of market, it's difficult. Okay. This market has made me sleep.
I think there is some weakness with internet. Am I audible, Nikhil? You can hear me?
You are audible. You are audible.
Okay, so wait, let me just get Bijur here.
Okay.
Bijur, just give me a moment. I'll tell Bijur to speak from here. We are in the same office. So just
okay.
Yeah, one sec.
Yeah.
Mine is clear.
Okay.
I told you.
Okay. Yeah. Sorry for that. Go for. Yeah. Okay. Yeah, I was telling about this. One of the common mistakes, people talking about the markets. That was one of the things we are trained, the batches, or even I have recognized, that is the one thing we can't do is that blame the market. Ultimately, then you as a CFO, as a corporate, you have to manage the cash flows. Traders have to consistently make money, good market, bad market. In currency, especially currencies, you can go both short and long. That is the beauty of the currency market. Unlike equities and all, it will be very easy and very liquid. Thanks, Nikhil, once again for your time and the way you spoke. I'm really thankful to you, and sure people will, those who are not registered, they will register after hearing you about your inaugural address. Thank you. And now I would like to request Dr. Pramod Solanki. Solanki is a HR specialist and a doctorate in HR, worked in L&T, Indian Stock Management, Ahmedabad, and Sun Pharma in their HR head. He developed the team, and he started his own company by name Performance Enablers. And I happen to be, we are together in Landmark, and we were trained together. And he has been associated with the Zen from this batch, and he's been training the coach. And let us hear from him what is this mindset coaching, and what is this mindset coaching, and over to Pramod Solan.
Thank you, Venkatesh, for those kind words, and very good evening to everyone, the aspiring traders and others who are here. Let me first say that actually Mr. Nikhil Sohoni covered quite a bit of the softer side of it, the mindset part of it. So at least now I don't have to make a case that this is also an important part of trading profession, so to say, and indeed very insightful, a holistic treatment of trading as you spoke, and I thoroughly enjoyed it. So,
one second, Dr. I forgot to tell when Nikhil was speaking. See, one of the things the global organization today giving priority, you must be definitely knowing that, that on the people's mindset, lot of amount money is spent, and the mind coaching, the global budget is more $5-6 billion spent on that. Even I think India it is picking up. So mind coaching, Nikhil, what they say that it's very critical. Unless the team is managed, team's mindset is managed, it's the progress is limited. Especially Google and all, they give a lot of importance. And now that after this COVID thing and all, the more of the importance. And few of the organization, if we don't give priority on that, so then I think we will suffer. Yes, over that Pramod can cover on that.
Sure. Thanks very much, Venkatesh. So, friends, I guess some of you have been, in this kind of orientation session earlier. So please bear with me because there are a lot of new people. So I'll be in this brief session, try and give an overview of everything that we have done. Different people understand coaching very differently. So without going into who gave what definition, I would say it's a method of communicating which can help the recipient, the coachee, unlock his or her potential for any kind of thing, personal or professional. Like I said, Mr. Nikhil Sohoni has already explained why the softer side is important. Otherwise, the reason I had put this question is why coaching for traders is because I can understand market, currencies, the various guidelines that Mr. Nikhil Sohoni spoke about. You need to be on top of all of those to be a good trader. But, coaching, some may wonder. But I think Mr. Nikhil Sohoni's session has addressed that question that anybody might have in mind. Let me just build on it a little bit. If you look at a trader's work on a regular day, these are things that a trader goes through. I take a call, don't take a call. Some who have been doing it for some time, they think, come on, I know it now. I can do it just like that. There are some who worry, I lose money. There are others who are, this is very, very promising opportunity. I can earn more if I put in a little more money here. Greed bit that earlier also spoken. What to do, whether to take or not to take, feeling anxious. And all of these, fear of missing out. I'm hedging one currency, but I think something else will gain. Maybe I'm missing there. And then whether to do or not to do, will I gain, will I lose? These are emotions, responses that you are dealing with all the time when you are on your desk. And therefore, the mindset with the softer side that Mr. Nikhil Sohoni spoke about becomes so critical in addition to the technical inputs that you have to be a good trader. Because if these are gripping you, these unhealthy emotions and reactions are gripping you, it is very difficult to be an effective trader. What you need to be an effective trader is patience and discipline. Patience in the sense that if you have your parameters, if you have, how much capital I will deploy and for how long and at what risk, if you have those parameters clear, wait until you feel that by and large the signals are telling you that yes, your parameters are met, and you act. So to be able to withhold those temptations and be patient for the situation to meet your parameters is extremely important. As much as a discipline, that when I find that these parameters, my strategy or trade plan, whatever you have, is being met, then I act decisively. That time I don't worry whether I will lose or I will gain, whether I will lose more or gain more. So a discipline to act decisively and the patience to wait for a right opportunity. These have to be fundamentals of the way you take calls on this kind of work. So what you need is this. You need mental toughness, because the best of traders lose money. And you will also lose money in trading. All you need to do is to win more than you lose. And therefore, when you lose, are you able to bounce back quickly is something that you have to have it. And therefore, these are very basic requirements. The market will present a different picture to you every day. Someday very volatile, someday very flat, someday upward swing, someday downward swing. And if you are not used to being comfortable in different scenarios, it is going to be difficult, and therefore adaptability. And then independence of thinking. We'll talk about this more. But right now, my limited purpose was that your normal reactions are these when you are in front of your desk. Whereas what you need is these. Some of us may have some of these. We may have a natural gift, our upbringing, and the rest of it. But not all of us have all of these. And this is where coaching has a very significant role to play. And this is where your people, Mr. Venkatesh and team have put together a team of, a team of coaches who have been inducted on how do we nurture the right kind of mindset. Some of you have it, some of you may not have it. How do we discuss and understand what you already have, what you will need to nurture and need to develop and nurture, and on that basis, draw a development plan for you. So you need a skill set. What Mr. Sohoni was talking some time back, and what your rest of your faculty members are going to teach you is a skill set, technicals, market, and the rest of it. And coaching is what will help you with the mindset. And you have, there's a group of some 7 coaches, if I recall correctly, who have been inducted on how to go about this coaching. And they will be available to help you individually, also as a group. And in this process, as you go through the course to learn the technical skills of it, you in parallel also develop the kind of mindset that can help you get to the next level in terms of this. I think I spoke of some of these, but just a few things more discipline and patience, you understand. Mental toughness, you understand. You need to get back quickly. Otherwise, you could lose some very important promising signals where you take calls, and therefore you need to develop mental toughness. Adaptability is something that one has to get used to, because the market will continue to be different every day. Your screen will look different on different days. An important part is developing a point of view that works for you. While you can gather inputs, technical inputs, experience, all of that, but the fact of the matter is the capital that is available to you is unique to you. For how long it is available to you is unique to you. What is the loss you can take? What is the risk you can take is unique to you. And therefore, eventually, unless you are able to develop a thinking that what is best, what strategy suits best to me, it is going to be very difficult for you to be able to write calls. So listen to everyone, but being able to develop a perspective of your own that works best for your situation is something that you need to keep learning all the time. And here again, your coaches can be very helpful for you. Some of these habits that help, I think whatever time works for you, once a week, once a month, it is an extremely useful practice to reflect. How did I do in terms of the positions that I took, what I gained and what I lost? Each one of these has a learning. Was I prepared enough? Or I needed to, in the hindsight, when I look at the calls that I took and I lost some, in the hindsight, do I feel that I could have done better in terms of preparation? Am I up to date in the market? As I do take these calls and reflect, am I learning? Am I in a better position to take a more informed call next time? All these are questions that if we periodically ask ourselves, our ability to handle the situations will keep improving continuously. And this is why finally we say that each one of you can develop your own plan, what you should focus on when it comes to your work with the coaches. You will bring certain strengths in the mindset, you will need some support in certain areas. Have your own plan. Coaches will work with you to see that you keep improving, and by the time you get to completion of the course, you have a much better fix on the kind of mindsets that work. So this in nutshell, it tells you that when you follow a process, like for any professional activity, there are certain guidelines you have, there are certain parameters you have. Based on those parameters, when you act, normally you end up on the right side, you end up on the winning side. And your lesson is that, yes, I adhered to the rules and I won, and it should reinforce that this is the way to act. You can lose even after adhering to these parameters and guidelines, because like some time back, both of them, Mr. Sohoni and Venkatesh, were talking, you can never control everything in the market. But if you have adhered to the parameters and then have lost, your only inference is no big deal, because I can't control everything, I can lose. When you don't follow some guidelines, sometimes it can get very tempting. You see something, you can make a killing. As a human being, once in a while it happens. You bet there and you won. Your inference only should be, I have been lucky. Not that, look, I know the market, I can crack it anytime. And when you break the rules and you lose, of course, your inference has to be that I deserved it because I did not follow the rules. So when you have a process orientation, every action that you take or you don't take has a lesson for you that keeps strengthening your ability to take better calls on the trading game. So therefore, instead of just looking at how much did I make and how much did I lose, please look at the process. It will keep improving you. continuously. Rest of what I have is how your coaches will work. You don't have to particularly worry about it. It's something that coaches will work with you individually and also as a group. But what I shared earlier is where you can arrive at a development plan, which is a focus of how will you keep improving in terms of mindsets that work for coaching. So that essentially is what I wanted to share. And like Mr. Sohoni said, this is possibly one of the few programs where not only technical inputs and the guidance about how to act, but also the softer side of what makes a person a more effective trader is a part of this course. And therefore, I completely endorse and agree that with all of this together, you will be a well-rounded trader and in a much better position to do your job well. So this in a nutshell is what I wanted to share. In a few minutes that I'm around, in case you have any questions, I'll be more than happy to take. You are muted, Venkatesh.
We are running out of time. Any questions, please tell. I think me and Nikhil Sohoni has taken more time. Pramod was within his time. Okay.
I had something lined up. So
Anyone has any questions? Otherwise, I'll quickly pass on to going to the next speaker. Okay, thank you, Pramod, for that. How you summed up in a very highly professional way, and participants are well assured that their coaches are being trained by you or supervised by you, and they are in good hands and good training. Thank you once again. I would now like to introduce my good friend V. Rajgopal. Rajgopal started his forex trading a few decades back in Syndicate Bank. And from there, he moved to ICICI Bank as a chief dealer when the ICICI Bank was formed. From there, he moved to Kotak Bank, Kotak Mahindra Bank. There, he was a senior vice president and a chief dealer of corporate as well as interbank. More than all this, Rajgopal is a very physical fitness person. You know, he plays shuttle more than his dealing career. I think he's playing shuttle. And in addition to shuttle, he meditates, he prays, and I've seen him. However, the busy schedule, the training programs in NIBM used to start at 8:30, 8 o'clock. It goes up to 8 o'clock, even sometime extend to 10 o'clock or 12, 11 o'clock. But Rajgopal doesn't miss his shuttle as well as his prayers. I'm sure he continues that even now. And I always say, people, participants, if you hear him very attentively, he's going to take few classes also, not only today. Today he doesn't have much time. He will not be able to tell you about few trades and all. He may come prepared for that also. But the last few sessions, whatever trade he said, if the participants have done, they would have earned much more than what the fees they are paying. And he still trades and spends a lot of time on technical analysis. So we call him a technical guru, and he balances his life between family and trading and playing and so many things. I don't think I have covered fully whatever he has done. We call him technical analysis guru. He's a good friend. Again, over to Rajgopal.
Thank you, Vijay sir. Friends, you would have seen when you go to a doctor and you tell him I have pain in the hand or leg or anywhere, or somebody goes to a doctor with some kind of chest pain, the immediate response or the advice that the doctor gives is to take a chart by whatever name you call, X-ray or ECG or anything. So it's a chart. And in the newspaper, for example, what kind of water levels are there as on, let us say, June 13th. You want to compare. So usually they give you data for the last 10 years and say that on June 13th, over the last so many years, these used to be the water levels in the lake. So kind of understanding the situation, it becomes better if you have a chart in front of you. Rather than one point data, a series of data. That seems to make it easier for our mind to understand the situation. And if some of you had the fortune of talking to participants from the earlier Zen batch, they would have given you some kind of insight into how we approach the markets. All of you are so well informed, right? You get so much of information on CNBC or ET or Bloomberg or whatever, whichever channel you love to watch. And then on your smartphones, data comes flooding. Whether you want it or not, every second of your life, data is flooding your life. But can we make a lot of sense out of it? For example, one very prominent news going on is the war, Russia-Ukraine war. Is it damaging? Is it good? So initially people started by describing it as bad, and then they said it will do good for some countries. And in those countries, some of the industries will do better. So this kind of statements are there all the time. Even as recent as what, 2 days ago or 2 days ago on CNBC, if you had heard some analysts, they were saying market has very good support at 16,000, that is Nifty, and the bounce is going to be very sharp, 16,800, 17,400, 17,800. All this is possible in the coming months. But what we found today, a massive decline is what happened. And this massive decline would have resulted in many portfolios being virtually washed away as if in a flood. What happens when you use charts is that you are relatively better informed as to the prevailing trend. All of us know that whatever is said on TV, whatever is unsaid, whatever is your interpretation of a particular news or event, you would have found that in the market, when we say market, we basically mean prices. Prices move in trends. There is an uptrend, there is a downtrend that you can see, and there is volatility also. So that is what makes the market. Now, the simple question is, how do we make money? Is it with the information we have that we make money? No, we can't, because information is equal to so much in price. You will realize any kind of news. Let us say the war broke out. Did you read anywhere this war will likely have an impact of 4,000 points on Nifty, 10,000 points on Sensex, 120 rupees on NOSIL? Did we get questions like that? Or Fed Reserve moving up rates by 2% will result in some equities in India dropping or going up, whichever way the interpretation is, going up by 200 rupees or 300 rupees. These kind of equations are not available anywhere. And even if you get into the best textbooks on economics, all they have said is factors that move the markets. That is what is explained there. But against each factor, the number is not mentioned, because everybody is very clear that the numbers are created by the market players, and market players are you and me. So what we need to do is to realize that money is made only when you enter the market, not by talking brilliantly, eloquently on the market. I can give a lecture on factors affecting rates for an hour or 2 or even 3 hours. It will be very eloquent, but that's not going to help you. Ultimately, it is your position taking. And when I say position taking, I am making it very clear. It is not only going long or only buying that will result in money being made. You will have to go short. Whenever the situation warrants, you will have to go short. For example, in a bearish market, you have to go short first, then square it off for a gain. That's how it happens. So you have to commit. The whole process of using technicals is to help you to commit, make you take an action. And you will find that once you become more and more comfortable with looking at charts, analyzing them, you will probably generate the courage required to enter the market. That is what is most important. A lot of people I have come across, even those who have been taken as traders or dealers in banks, they were all tremendously hesitant to take positions. And even when they took the position, they took it for very small amounts. That is, small position will help you to make only small money. Of course, you may also lose small money, but that's not the game that we are in. We are in a game where we want to make more money. More money can be made only when your position size is bigger. And how to be able to take bigger positions with confidence is by becoming more and more familiar with charts. And why and how do charts work? Why do we say charts work? It is because charts have been looked at for a number of decades and there are common patterns. This upswing or downswing seems to be very similar. Over the years, there is a great deal of similarity in how the upswing unfolds or how the downswing unfolds, or if the market is in a sideways kind of movement, what is likely to happen post the sideways movement is all there, already recorded in history. And this knowledge of history will help you to create history. So it is continuous. Market is continuous. Your actions can be continuous in the market. You don't have to worry that the market will stop and you may be not having an opportunity for a number of months or something like that. No, markets are there every day. So you will get the opportunity to enter the market. The whole approach should be to understand charts in all their simplicity. Tools are aplenty. If you were to get into any of the charts, you will find there is a scope under studies. Some 40, 50 studies can be done. Do we require all that? I don't think we require. At least I don't use most of those studies. I keep charting simple because I tend to understand only simple things. And I can share with you probably the call that rupee will go to beyond 77, will hit 78, etc. This call was given at least a year ago in some training classes which I had conducted, technical training classes. So we had seen this to happen. And it was not, some kind of sitting under a bodh tree and getting enlightenment there through meditation. No, it was looking at charts and seeing the patterns. So there are rules which are there. So we just applied the rules and said that rupee will hit 78. Now, did it help people? Probably, some exporters, some importers who attended some of those training sessions, if they felt that it was worth acting upon, and as Mr. Nikhil was saying, they hedged 30% or 40%, they would have benefited to that extent. But one person gloriously benefited from my view, and he was a neighbor in our building. He was emigrating to the US and was extremely hesitant to convert his rupee into dollars. He was a buyer of dollars. So there were people giving him opinion that rupee will go to 73, 72, 71, etc. So he was highly hesitant. I told him, as per my chart reading, rupee will only weaken in the coming days, in the coming months. And then he was very reluctant, but then since he had to leave, he converted most of his rupees into dollars. And today I'm sure if he's looking at the rates, he will at least feel thankful, not to me necessarily, thankful about the meeting he had with me. He at least acted on it. So there is benefit, but as I said, important point is that you have to take positions. You have to enter the market. It is no use telling another friend or a group of friends, I told you, see, last month I told you this will happen. It's of no use. What is the use of claiming credit that I told you has no importance. Did you act on it? Did somebody act on your advice and make money? Participants in the earlier batch, some of them were bold. Even as they started off, they said, sir, we are going by what you are saying. And I think Mr. Bijur sir has information from them that they are very happy with what they did. And they made a decent sum of money. And I'm not saying that all my calls will be right, etc. But you will see that you will be also able to make similar calls, because our process of learning is to work together. Analyze the charts in a very simple way and try to arrive at a conclusion. So that is what we will be attempting to do. Thank you, Bijur sir.
Yeah. I think Rajgopal will be coming back as a faculty. So for want of time, I'm not taking any questions. I have a pleasure to introduce Daniel Was. Daniel Was, by qualification, is an IIT engineer from Mumbai. By profession, he is CEO at a Bartley Boy at their textile division. More than that, today what he is going to speak is about his passion, about his running. He ran over 40 marathons all over the world. He is a head coach at Nike, and he has a passion to make people run and at the same time maintain a good health, no injuries. He's put a lot of efforts to learn himself what are the factors contributing to injuries, what are the kind of food habits you have. He has vast knowledge about it, and he has been training the Zen batches. And now he will share his thoughts about how physical fitness helps in training. Over to you, sir.
Yeah, hi, good evening, everyone. I'm going to be brief. I'm going to get to the heart of the matter so that we don't waste time. And if you can allow me to share my screen, yes, okay. So, all right. So I'm going to just dwell on why the physical fitness aspect is so important in trading and how does it benefit you. So for that, you need to understand certain concepts. What is obvious is the underrated benefits of exercise, such as improving your functional mobility, energy levels go up, you get better sleep, overall improved health. Also, other than the fact that your fat percentage goes down, you look a lot leaner, there are biomarkers which change for you in terms of your blood pressure stabilizes, your blood sugar stabilizes, your lipid profile improves and things like that. But what is most important is that at a subtle or subconscious level, there are changes that are made in your nervous system. And these changes are the ones that are going to benefit you. So what are these changes? A while back, I saw the presentation in which about mind, in which there were, you have to battle nervousness, anxiety, and fear. Now, whereas you can learn to control your mind and prevent panic because the mind can be harnessed to do this. At a more subtle level, I want to tell you that there are two systems within your body, which are, one is the accelerator and the other is the brake. These work on your heart, okay? And that's the reason why your heart rate goes either up or it goes down. So the sympathetic system is the accelerator, it takes your heart rate up. The parasympathetic system is the brake and it brings your heart rate down. So extreme examples are, if you're chased by a thief, your heart rate goes up and that's how you start running. The sympathetic system is acting. When you're lying down on the sofa and watching television, your heart rate is down, the parasympathetic system takes over. Now, what is most important is the rate of reaction of your body to any of these either physical signals or emotional signals. If you are encountering sudden stress, nervousness, fear, or anxiety, you can respond immediately by having your heart rate go up, or you can respond in a calmer session by having your heart rate under control. Now, how does this happen? It is not merely the mind that controls it. It is your fitness level which will dictate this autonomic nervous system. The more fit you are, the better is the rate of reaction, in the sense that your parasympathetic system is always the one that is going to make you calm, and it's the one that takes over. As an extreme example, I can tell you about, let's say, a commando, a soldier. Even in the midst of exploding bombs around him or gunfire directed towards him, what does he do? He is calmly analyzing the situation and wondering and making a plan as to how to respond. So there are two things. One is the fact that mentally he is capable of staying calm. The second is, if you were to track his heart rate, you would find that there is no spike in his heart rate despite gunfire being directed at him. That's because of their fitness level. Okay, so this is what is going to benefit you as a trader in terms of your fitness level, which is where the physical fitness aspect comes, where I am going to be training you. Now, physical fitness can be in the form of yoga, it can be in the form of strength training, it can be in the form of aerobic training, which can be either cycling or running. Where the best part about running is its simplicity. You just need regular apparel, which is meant for running, and you need a pair of shoes, and the road is your gym. Okay, so that's the simplicity about running, and that's the reason why running, it takes a center stage in terms of the fact that you can get into it almost immediately. Why immediately? Because you were born to run. You see, it is primal. The hunter-gatherer grew into, the anatomy grew only because you needed the endurance to outrun your prey and collect food. So it is hardwired within you to run. And that's the reason why we focus a little bit more on the fact that we want to make you into a runner, although it is not absolutely essential. Should you want to stick to plain yoga or CrossFit or strength training or flexibility training, that's also fine. All of this can contribute to ensuring that your autonomic nervous system is robust. Okay, so why running? So let's quickly look at why running. The same thing can apply to cycling or even your gym training. The running helps you develop virtues such as commitment, courage, self-discipline, drive, resiliency, persistence, toughness, hopefulness. You'll see why that is so, because when you take part in races, all of these things are going to come to the fore. Now, when I have been going for a run over the last 26 years, it has been like a ritual for me. Okay, it has been a cleansing system, not just for the toxins within my body, but also a cleansing system for the mind. It has been a time for me to reflect, a time for me to make a game plan before I go to work. As a CEO, as a vice president, you have certain commitments in terms of what you need to achieve for the company and you need to come up with a game plan. This is the time when I reflect and make that game plan when I'm moving or cruising at a moderate heart rate level through any route that I choose to run on. It also helps you to improve your self-image. So quickly, what are the similarities between running a race and running a business or trading? Is A, you will be setting a goal for yourself, whether you want to do a 10-kilometer race, a half marathon, or a full marathon. The same way you would set a goal for yourself as a trader as to what exactly you want to do. You would make a plan. Yeah, on the left-hand side, you can see the trading plan. On the right-hand side, you can see a 10-week half marathon plan, wherein for every day of the week, you have defined what exactly you are going to be doing. All right. You work hard to execute this plan. Okay. It's not just that you draw up the plan, but you follow it and you execute the plan. Next is you surround yourself with the right people. Runners tend to network, make sure that they are with people who can enhance their own abilities and share notes on running. The same thing would happen to you as a trader. You would network with the right people. Okay. In a race, you would have to brace for the unexpected, a sudden incline coming up, a slope coming up, which you would never factor in. The same thing can happen to the graphs that you are following as a trader. Sudden a plunge or a rise, either ways, it is something unexpected. Okay, you will encounter setbacks like this, a sudden drop caused by some global event. You could bust a knee in the race, and you'd have to contend with that and work how to overcome it. Right? You in the race, maybe if you bust the knee, you would still walk to the finish line because you want that finisher's medal, and you would still have qualified to have completed the race, finished the race. Right? You would cross the finish line, you would get your finisher's medal, and you would inspire others. Okay, so we say that running is the new golf because in running, the kind of networking that takes place is much vast and higher than what your people would do on a golf course, which was available to a select few, whereas running is available to any individual, irrespective of race, religion, caste, and creed. Okay, so the next thing is marathon runners make better CEOs, and that's where I can only give you the example of the Tata chairman. Okay, the fact that he runs marathons, and you would see that there are many examples that come up at the time when the Mumbai Marathon takes center stage. You would find the newspapers giving you information about many corporate level people who are going to be running the marathon. So what can you expect in the program? We are going to be doing strength training. You're going to be doing endurance. You're going to be doing flexibility training, plyometrics in terms of using jump rope or skipping rope. I would teach you how to monitor your heart rate, or rather the effort level as easy, moderate, and things like that, and hope that you can get started. All right. So that's it from me. In case you have any questions, I'd be happy to answer them.
Any questions? Any questions about the course also you can ask. So if there is no questions, those of you have joined the program, see my compliments and congratulations to them. Those of you, if you are sitting at the fence, just join the program, and we promise that your physical fitness, your mental fitness, and we are sure that we will train you as a master trader, and you are going to make money for which you have joined. And there is one question. Yes. There is a question to Sir Dan. Yeah. How many kilometers you run on an average per week? It is 55 to 70. Yes, he does. I can coach. I am trained under him, Jagan. You know, Jagan is also a runner, sir.
That's nice.
Yeah, so he runs and he was telling that, so running to my karta hu, I will do the only mind coaching and this thing technical analysis. Then I told him that you have a coach, just listen to him, then you will know, understand what is running and what is the difference to run under a coach and without a coach. Yes, Joy? Joy, anything? Okay, any other questions, we are available over phone as well as mail. Thank you very much for joining today's introduction to Zen and introduction to Zen and inauguration of Zen 7. And once again, those of you not registered, I request you to register and have a great evening. And thanks, Sir Dan, for your wonderful talk and making running looking simple. And with this, we'll conclude. Thank you.